S&P500 day trade set up for today. So yesterday we had, this is run back a bit in time, so Thursday, Friday we had two pin bars come in, and then yesterday we had a massive rally. So as expected, I said to you yesterday we were looking for longs, we got the longs, and I think there's a couple of things that have transpired which are pretty critical to understand. First one is this trend line here. We picked this up late yesterday. You see touch there, touch there, touch there, touch there, touch there, and we broke above it. We've also broken and closed above the 150 EMA. Now, if we start drilling down into the lower time frames, you'll see the significance of this trend line. See, three touches there, touch there. Okay, so I would expect us to pull back into this area. I'm looking for an opportunity to get along again. I am a bit wary because we are top of range. Okay, so a couple of things I'm looking for is, firstly, I'm looking for a pullback onto this trend line or onto some form of structure. So we sort of not quite finding support here, so I would expect us to drop a little bit further. And there are so many little micro levels here that we need to pay attention to. So that's kind of the area that I'd be looking at. So back onto this trend line, see what happens at that area, and then look for the move to the upside. Okay, if that trend line does fail, then we would look a little bit further down, and I'm looking for a break above this area. At the moment, as far as I'm concerned, we're top of range. Okay, there is another trend line we need to pay attention to now, which is formed, which is this. We've got two touches on that. I'd like to see a third touch on that level as well and hold. That would give me a fairly confident signal that we need to be looking for long. So with all that in mind, we are watching two areas, possibly three, but the first one that we're watching is 29.30. Second one that I'm watching is this 29.14. And then, depending how we come down, I'm also watching this area here. Okay, you can see this inside fractal here. And if you look to the left, you can see a couple more touches on this area. So it does look like a pretty significant level. A lot of interaction there. That's 29.03 or 2900. Okay, I think the most common target for us, well, the most logical target for us right now would be 3,000. And 3,000 is up there. Okay, so just coming back to the 8 hour. So we're going to have to just delete this noise so we can see the structure and zoom in. Okay, so this trend line is pretty critical. Okay, this head and shoulders, we've closed above that shoulder. As far as I'm concerned, that's done. It's finished. We've had a crossover the moving averages anyway, as far as I'm concerned. So this is a consolidation of the move to the upside. Now, what has transpired, if you are a head and shoulders type of person, this is a trend line. Here is a shoulder, here is a head, and here is a double shoulder. Okay, so I'm not kind of from that camp. I don't like looking at head and shoulders in a diagonal view. I prefer looking at them with horizontal trend lines or support resistance lines. And this is my line in the sand. Okay, so that is my top of range. You can see there's my move there. A break above that is going to get me long, and it's going to get me long for quite a while until I tag, more than likely, this gap closed to the top. Okay, so I know it's not what the bears want to hear, but guys, you've got to trade what you see here. Forget the noise, forget the fact that the economy is shot to ribbons, forget the fact that there's chaos happening out there. That's exactly what the financial institutions want you to believe. And retail traders, we can't move the market. So much as you think you can't move the market. So you need to trade in the direction that the big boys are going, and forget the noise. Forget listening to all these news channels telling you, professing that they know exactly what's going to happen with the economy and what's going to happen with stocks, because nobody does. I don't. You guys don't. None of the central banks know. This is all driven by computers and AI. So if you're going to fight against the tide, you're going to get burnt. And that's probably the reason why majority of retail traders don't make money. But anyway, so for me, I am looking for some structure, and that structure I would prefer to see come back into an area of support. And then what I'd be looking for is a move to the upside. One thing I do want to point out here, though, is horizontal head and shoulders. And I've spoken about this before, is, why do I take the lowest shoulder neckline? So you can see here is the shoulder, here is the head, here is the shoulder, and I always take my measured move off the lower shoulder. If they're equidistant, in other words, they both finish at the same level, then I'll take it off there. But I'll show you now. So that's my target, and you can see it was tagged exactly. If I take it off, the next neckline, you'll see I'm short of it at the moment. Okay, so this way what happens is I get the opportunity to take my profit, wait for structure, get back in on the trade. And all that happens is I'm probably, it's normally a half decent retracement, but I'm saving myself, on this case, 500 points. Okay, so yeah, definitely waiting for structure. It could be happening at this stage, but I'm not interested in the Asian market. So I want to see what happens at London Open, and it could very well be in this area. Let me just zoom in here. So pretty much the same structure as what's happening on the Dow, and that is sideways channel at the moment, sideways downward channel at the moment, looking for support. As soon as we find support, I'd expect us to bounce around and then a breakout. This is my line in the sand. If we get above this level, 2975, just 2975, we get above that level, yeah, that's just going to confirm my long, and we have a fairly good target to the upside for that one. Okay, yeah, so anyway guys, that's me for today. Hope it helps, and we'll catch you later. Cheers for now.